Check, please.
Hey, welcome back. Today we're talking about NIO, the Chinese EV car company. Production is up. Revenue is up. We'll take a look at it. You'll hear our thoughts on their financials. We'll use our initial screener to see what we look for in a company for a potential buy. The stock has fallen greatly, so we'll lead you down a path whether you should be investing or not. I bring your questions to Paul and Mo. They manage a bunch of businesses, a bunch of money, and they'll show you their thought process of investing in a company that's been very, how would I say this, overhyped and might be coming down into our sweet spot. Let's get after. Paul, tell me your thoughts on NIO.
Thank you, Seth. Before we go further, guys, please follow us on Instagram, our new Everything Money Investing account. And then also follow Seth, Mo, and I personally, because it really helps our egos out quite considerably. All right, so NIO. Let's go to our 8 pillars tool, and let's pull up NIO. This is the #1 electric car maker in China, correct?
Yeah, well, I mean, I guess maybe besides Tesla, but something in that range.
But I don't think Tesla's as big as NIO in China, is it? Maybe it is.
I have to look that up.
China.
In essence, Paul, what they're saying is, there's a very storied history behind NIO. Earlier this year, this was what you would probably term an incredibly hype stock. A lot of YouTubers were trying to get famous off clicks. We're saying this was going to 100. Stock Mo was very adamant this could go to 400 this year. And then,
by the way, Stock Mo is now currently quoting Warren Buffett,
of course,
as his way. And I've heard this so many times. I remember once a billionaire quoting Warren Buffett saying it's you got to be. He said the exact same thing Stock Mo said. You got to be greedy when others are fearful, and fearful when others are greedy. And meanwhile, the guy was buying premium properties in LA, New York, and Miami.
Yeah. Meanwhile, Stock Mo was buying. He's being greedy when everyone wasn't fearful about NIO. They were actually incredibly excited about it.
Correct.
So it makes zero sense.
By the way, look at their cars.
Gorgeous cars.
They are absolutely gorgeous cars.
So at this point in 2021, we're in 22 now, but in 2021, this has gone down from $64 a share down to $29, kind of like we told you in every video ever. And they did, in fact, Paul, deliver 92,000 vehicles, a tenth of what Tesla delivered last year.
Oh, that's it?
A year-to-year increase of 109%. So they are doing well.
Oh, I thought they were bigger than that. Oh, wow. Only 92,000 vehicles?
Yeah, so I went to the news and Everything Money, of course, and a lot of people are now sort of bullish on this stock and saying that their sales growth, their car number count is up. And so for you, it seems like now that we have this enormous crash, maybe it's time maybe it has hit our wheelhouse. So maybe go ahead and proceed.
All right, so probably not.
Okay.
So guys, this is a $46 billion company that sells 91,000 cars. Okay, Ford just hit $100 billion valuation. A market cap on how many cars they sell a year? 5 million, 10 million. I mean, how many cars does Ford sell a year?
Yeah, I have to look right now.
Yeah, look it up. The whole point is, guys, I'm not saying NIO could not become Ford, the size-wise. And if for those of you who say that Ford and NIO are completely different businesses, they sell cars. That's the bottom line. I don't care if the engine went from gas to electric. It does not matter. They sell cars.
4.2 million for Ford last year.
4.2 million cars versus 91 and double the market cap. Okay. All right. Yeah. Our first pillar is we want a 5-year PE of under 22.5.
So we're not going to get too far with the pillars, Paul, because this company is so young.
Correct. So guys, remember, a young company. I like to look at stocks and companies the same way you would look at an athlete. You're not going to go off of one good year or 1 year of data. You want to see a track record. You want to see how they progressed over their career. How do they do in high school? How do they do in college? How do they do in the minor leagues, etc. Same with the company. I want to see a track record because the future is unknown. We don't know what's going to happen in the future. But one way to see how a company could do in the future is to look at their past. So let's go to their income statement here. We have very, very little data. Let's go to the annual one. I mean, they just started creating revenue in the last few years. Mm-hmm. They've lost a lot of money. Every year they've lost money, between 400 million and 1.8 billion a year.
Which is expected for a young company.
Correct. They're issuing more shares in order to finance that growth. I get it. Cash flow. Have they had any cash flow in the last 5 years? Oh, they had free cash flow last year, 130 million. Look at that. Well, suck me sideways and call me Betty. Mm-hmm. So that would be, 400 or 350 times free cash flow for last year? Listen, we have all these 8 pillars. Like I said, not enough data. But let's go to our stock analyzer tool. And the reason being is the great thing about the stock analyzer tool, it's become the most popular part of our site. it allows you to make assumptions about the future because we don't know the future. So we have to make assumptions based on what we think is going to happen.
Our goal is to make what we think is not crazy assumptions, but more conservative even.
Well, so we have 3 levels, low, middle, and high. I do think your low should be conservative. Your middle should be about where you think it's going to happen. And your high should be, hey, listen, if they kill it, if they do better, here's what's going to happen. And China is in a huge market. And I would say that NIO, from my understanding, is probably the China electric car maker right now. You said, let's look up how many cars did Tesla sell in China last year? That's a good question to ask. How many cars did Tesla sell in China in 2021?
Tesla has a plant in China, don't they, Seth?
Either they're building one or... So I have here they sold, let's see.
218,000 cars year to date as of November.
In China?
In China.
Huh.
All right, so they definitely are the number one car. So let's just do some analysis here.
So here, I'm sorry, Paul. In Beijing, Tesla maker sold 53,000 China-made vehicles.
In Beijing alone.
Yep, including 22,000 for export. So these are the Model Ys and Model 3s.
So the bottom line is they probably sold more cars than NIO. That's the data we're seeing on a quick Google search. That's what we're seeing.
Absolutely.
All right, so let's do this. Let's do some assumptions here. I'm going to do a 10-year assumption for NIO. Let's say low side, they grow at 15% a year. Middle side, they grow at 30% a year. High side, 45% a year. Let's see what that takes their revenue to at 45% per year. To the 10th power times, how much do they do in revenue?
The current revenue is $5 billion.
So that would take them to $205 billion in 10 years.
Doesn't seem outlandish. Am I wrong?
It seems high, but we'll put that in there. Let's just put that in there.
Okay.
200 billion, because what does GM do? What does Ford do? Probably about 400 billion or 300 billion. That would make them have...
What does Tesla do? I mean, Tesla is about a decade out of when they first started, about.
Yeah, and they do 40 billion.
47 billion.
Okay, so either way, let's just put it in there because we want to do some crazy assumption high. Now, profit margin. Guys, this is where we have to assume some profit margins here. Let's assume they do 6, 8, and 10%. Same with free cash flow. I'm just going to assume that in there. Now, the problem with our software is it cannot account for any losses along the way. So it does assume that the profit starts today. Okay, so this will be a rosier picture than what actually is existent. Now, PE. Let's go 14, 16, and 18. You might sit there and say that's low. But guys, if it's doing $200 billion in revenue, it's become a normal car company. So you have to value it at a normal car company level. And I'm doing 12.5% return like I always do because you're going to buy an individual. You can go invest in an ETF and get 9 or 10%.
Can you explain this to me though? I'm sorry about that.
No, go ahead.
I cut you off. Paul was saying that you can invest in ETF at 10%. We want 12.5 if we're going to put our neck out there. But like you say, at some point, NIO will become a big company and their PE must be smaller. But Tesla's the biggest company and their PE is 300.
Yeah, and Tesla is probably the most overpriced company in the world right now, in my opinion.
Yeah, if everything was normal with Tesla, they would be probably a 18 to 22 PE.
So people tell me Tesla's different. All they did was, they're saying there's a technology company. Well, then why are all their numbers like a car company? They've got roughly the same gross margin and profit margin. I mean, I look at it going, even if Tesla was a technology company, why does its margins suck? Their gross margin isn't equal to even the bottom line profit margin of a normal tech company.
Now, NIO does offer other things like Tesla as well. So the argument is that this is going to grow to even more of a car company. But keep going on your assumptions there.
So let's go. We're going to hit analyze. And guys, like we said before, in our previous video, we did it in the high level. So if you believe NIO will grow at 45% a year for the next 10 years, have 10% profit margin, 10% free cash flow margin, which, by the way, no car company has that right now, and that's on an 18 PE to it, yeah, you're killing it buying it today. Now,
there's no reason to believe that those numbers will or won't hit. This is
speculation.
Making up speculation.
Now, at 30% revenue growth in 10 years, at $69 billion in revenue, okay. Makes a little bit more sense.
More realistic.
More realistic. 8% profit margin. Okay. Maybe. What do Ford and GM do? Ford does, we can look at Ford. Ford Motor Company, they do 2.1% profit margin. Let's see Toyota. Toyota does 10% profit margin in the last 12 months.
I guess the argument too, we get a lot of comments saying that how dare you compare these companies to Ford, but in essence, folks, I would imagine in the next 10 years, Ford will have, hasn't they stated they're going to have a complete line of all electric? Would they even have a gas motor besides the big trucks and all that? I mean,
they already have the Mustang going. They already have the pickup truck going.
Lightning.
They're talking about the Bronco going.
So they're going to have a full line. I mean, hell,
all
probably
these companies are. Chevy's already coming out with the new Silverado pickup. GMC is coming out with a new pickup truck. Everyone's doing it.
Well, it's okay, though. The person who said that us comparing Ford to Tesla was stupid now currently has green hair. Well, on YouTube, they have green hair and they're financial advisor. Just like my Instagram account, I posted last night this absolute Guido who just got arrested and got sentenced to 17 years in prison, and he looked like an absolute for stealing investor money. And I literally looked at it and said, if this was your financial advisor, you deserve to have your money stolen. If you believe that people on YouTube who have no financial understanding, this person also put a 70 PE for Tesla 10 years from now when it's the largest company in the world, a 70 PE. But it's okay. Warren Buffett, Charlie Munger, Seth Klarman, Howard Marks, those guys are way past. They have no understanding. They're just dumb.
All right, so keep going with your valuation here.
I'm done. What do you want me to do?
Well, I guess, even with mid-range assumptions.
It's still overpriced. Mid-range assumptions.
Even with those mid-range assumptions, that's still...
I would believe this one a little bit better, but it's still aggressive. It still assumes a lot for NIO. Now, I will tell you this. Am I buying NIO here? No, probably not. Probably higher than this. If NIO gets down to like low teens, I'm probably interested at that point to build a small position. You know why? I don't need to build a big position in it. It might be one of those things where if I usually want 2.5 or 3% of my portfolio in one stock, I might put 0.5% in, because if I'm wrong, okay, maybe I lose 0.25% of my money. But if I'm right, that 0.5% could grow to 5% of my portfolio. This company could 10x if it beats a little bit of this, if it beats a little bit of the middle numbers. That's where I'm going to go take a risk on it.
The thing I like about NIO is they have the infrastructure in place. They actually make cars. This is a good thing. Compare it to the companies like Rivian and Lucid. They don't do anything. This is a company that I actually do like, as far as they have the capability to produce.
But you're buying this company based purely on its future potential.
Yes, 100%.
And I'm okay with that.
I can't say in the history of the show, Paul, you've ever even contemplated that we're maybe just a few dollars away from...
Well, because it was $60 before.
Right. No. I meant just now even, is that you're saying you're a few dollars away from investing in a company that still has no income.
I'm like 66% drop away from today.
Oh, I see.
It still needs to go to like around 10, 11, $12 for me to be a buyer, and it's at 30. So it still needs to fall 60% for me to be interested. So it's still a huge drop. And I'm even surprised that I would even be interested at that point. Now, if it's 2 years from now, it takes to drop 60%. At that point, we have more history. We understand, are they at $10 billion in revenue now 3 years from now, et cetera. So they did 92,000 cars. Wait a second. Let's see their revenue here.
That's starting to, now you're saying it, Paul.
By the way, why did we say $5 billion in revenue? Oh, that's why, because it is $5 billion in revenue. Moron. But again, that assumes they're profitable today.
I guess you're right. It all comes back to what you've been trying to teach me for the last few years, is the concept of let NIO settle down, let them be that great company. These are the first steps in investing from when you read any book about Warren Buffett, is let them be a great company and let's find them when they're cheap is the combination.
Yeah.
It'll be really good. So it's if you can overcome the fear of missing out, if you can overcome seeing all those videos on NIO with like exploding head emojis about how this is just a no-brainer rocket emoji, if you can overcome all that and start to realize we can let this play out a bit, let them make the cars, let them be a great company, and then we'll find them when we're cheap, and that's where the best investors make all their money.
Yeah, I mean, that's just where I stand on it, and I'm going to look up its options and see what options it has, but yeah, that's pretty much where I stand on it.
If you're looking at the software behind Paul, he'll tell you how to grab it right now. Go ahead, Paul.
So guys, we created the software because our subscribers were sick of waiting for us to make videos, and they wanted to be able to analyze their own stocks on their own. So we created the software. We put it all on your mobile phone. So everything you saw in the video is available on your mobile phone in full. You get 30 years of financial data. You get access to Seth Mo and I. You get the full 8-pillar analysis. You get the full stock analyzer tool. And then you also get everything that's coming right here. Everything down here. Exclusive video content only for our subscribers. Everything, the chat community with all of our users. This is all available for only $1 per day. That's it. $1 per day. If you can just increase your gains by 1 or 2% or decreases your losses by 1 or 2% each year, this will lead to hundreds of thousands, if not millions in your portfolio at some point in the future when you retire. This is a no-brainer, $1 per day. You're locked in at the price. There are 2 ways to sign up: everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge a sales tax, so you get to save the sales tax for the time being. So again, guys, $1 per day gets you locked in, leads to hundreds of thousands, if not millions. No brainer, sign up.
And remember, this software goes up every single month. We raise our prices, so get in now. You'll be locked in. Mo, what are people doing trading NIO? I'm certain it's volatile over there. What's going on?
Yeah, it's volatile. This is a good stock to trade. Now let me zoom this in. So we do have a 50% stock. We haven't actually pulled up a 50%er in a while. So what this means, this is your long-term chart. Here is your high. This was back in January of last year, and we're pretty much at your low. So if you just draw a line through the middle, there's going to be a resistance point around $44. Now, is it going to go to that point at some point sometime soon? I don't know, but all of that, if I draw that line again, everything above this, it's just negative pressure pushing down. You see this with CCL, you see this with Boeing, you see this with a lot of companies that got hit like this during the pandemic back in 2020, early 2020. So right now, let's just zoom in. This is just a dog stock, and it's been that way for a while. It's just been coasting on the bottom as the price just continues to fall. I would wait until this thing starts its incline, coming through the sweet spot. Is it going to happen? I don't know. Put it on a watch list. That's the best thing you could do right now, but don't do anything with it at this moment. With that, look at all these moving averages you have to get through. Look at how variable this volume is. It's just all over the place. You have big spikes in volume here and there, but it's not consistent, and you have to get through 4 major moving averages. What I would rather you do with this is pull up a day trading chart. NIO is a great one to day trade. It's one of our stocks that we day trade on a regular basis. You always have movement with it. Here was this is Tuesday, this is Monday. This was last Friday. Coming through the sweet spot, having good volume. This was the end of the day. As soon as you break over 80% on your stochastic, you go ahead and add to it with an engulfing candlestick, and you had to march through the end of the day. The morning of yesterday, you could have done something. Today, you're just waiting for it to break up into this 80% area or turn down. And turn down for what? And break into this 20% area or below. Guys, there's so many ways to trade the stock, but day trading it is my favorite because you get the volatility, because all of these hype dorks are in it and they just can't wait for it to go to the moon. So if you want to learn these rules, come and join me in the Bid and Ask Nation. You'll get the Trading 101 series, which is all of these rules that you need to be successful. You get the Employed Trader series, which is 6 stocks that I update every single day. Exclusive Saturday seminars. 1 Saturday per month is an open Q&A session to the Bid and Ask Nation only. And a chat community of 1,000+ people. Come and join me and learn how to do this.
If you need someone else to listen to besides Paul and Mo, I love going to Datarama, which shows what the top investors in the world, the most famous ones, are investing, and none of them hold any shares of NIO. So
that's because they're stupid.
Their stance is very clear. So they're only managing about $1 trillion. So, all right, that's our take on NIO. Follow along. When this puppy dips, we will be here to catch it, baby. We'll get dips further, I'm sure. And we'll keep you updated. Thanks for watching. Fondle that thumbs up. We'll see you next video.